Hello everyone, this is Alexander Nikolov. I was going to take a look at the stock market, at the US stock market, but obviously the story of last week was the commodities market, and actually all commodities. So this video is going to deal with the commodities markets. And probably the most exciting market for last week was silver. So let's start with the daily chart of silver. You see for the past 5 days, silver actually lost more than 30% of its value. So huge decline here. And the question now is, what are the implications of such a huge decline? If you take a look at the daily chart, so far this decline has taken prices down to the 100-day moving average. So nothing serious in terms of whereas the price in regards to the longer term moving averages, the prices are still above, well above the 200-day moving average. However, the steep decline, the speed of this decline is so huge that it signals a trend reversal. So until proven otherwise, also notice silver broke below one area of support near $36.50 per ounce. So until proven otherwise, the trend is now lower, and we can expect further damage here. Actually, this is a huge damage. So even if the silver is going to resume its longer term uptrend, probably it will take some time basing here, moving sideways before it is ready. It can be ready to move higher. So the odds are the odds favor further decline here, probably toward the next area of potential support near 31.20 level. And if a move below there occurs, then the next support is well below near 26.40. So steep decline here. The weekly chart still looks positive. The last week is not seen here, but even with the last week decline, the prices are above the rising 21 week moving average. So the weekly chart is basically positive, but the speed of the decline last week is a very negative sign that the trend in silver has probably changed from up to down. Let's take a look at gold. Gold declined a lot as well, but actually was more stable. The decline was more controlled compared to the silver decline. So here, the message is also negative because the prices moved below the important area of support near the 1500 level. This is this line, 1500 level. And also notice that the prices are currently below the 21-day moving average. But the prices are still above and well above the rising 100-day and 200-day moving averages, and above the important area of support near 1445, 1425. So as long as this area holds here, the odds are higher that the larger uptrend will actually resume after some further correction, probably through time. So the price declined a lot, and now if we see some consolidation through time, maybe the gold will be ready for its next move higher. So the gold is still in uptrend. But right now, for the very short-term period, the trend is lower here as well. Notice the sell signals from all of the daily oscillators. So the trend is lower, and we should pay attention to this area of support, 1445, 1425. Let's go to crude oil. Crude oil, this is very important here, the price pattern. Notice the decline last week was again severe, around more than 15%, but what's the importance of this decline? The importance comes from the fact that, again, the speed is very huge, very high, and now the prior advance from roughly 84 level, this is the February low of this year, to 114 top, that was the top of late April top, actually the top from early May. the top in crude oil was achieved in the 2nd of May. So this rise, the pattern of this rise is a clear ending diagonal triangle. This is a pattern from the Elliott wave theory, in which the advance takes the form of a wedge formation, and the waves overlap. So this is 1, 2, 3, 4, 5. So this pattern very much looks like an ending diagonal triangle, and if that's the case, the sharp decline last week actually signals a major reversal here. To confirm, the decline should continue in the next several weeks, and the minimum requirement that we have under the Elliott wave theory, the Glenn-Neely modifications that we follow, is that the minimum requirement is this decline to retrace 100% of this rise from 84 to 114. This rise to be retraced for less amount of time, and actually for half of the time that it took to form. So that means by the end of June, crude oil should be near 84 level. If the message of this that's the message of this pattern. So if that happens, that will confirm a larger trend, long-term reversal in crude oil. Right now, the prices are near 100-day moving average, and some support can be expected near the 92-93 level. So some bounce is likely this coming week, but the larger trend is now on the downside, and only a move above 106, $106 per barrel. Only a move above there will negate this very bearish pattern that formed last week. Below 84 level, going to the weekly chart, the next level of support is well below. It's near 68 and a half, 68.60. So we may see a huge decline in crude oil if this pattern here is confirmed. So far, it looks like an ending diagonal triangle completed and a new downtrend here. But let's see what the next few weeks will tell us. And finally, let's take a quick look at some of the other commodities. Let's start with sugar. Sugar is in, this is the ETF following sugar, SGG. This is the ETF that follows the sugar market. Notice the strong downtrend here. The prices below 21-day, 100-day, 200-day moving averages. All moving averages moving lower. So sugar is in long-term downtrend now. Cotton. This is the ETF following cotton, BAL. Here the damage is not so strong, but again the price pattern is negative. Prices are below declining 21-day moving average, below a already declining 100-day moving average, and still above the 200-day moving average. So not a quite negative pattern in cotton, but overall this is not a good sign, not a good picture here. But still, a case can be made here that the larger uptrend from last year's low, actually, that was achieved in February, and then the strong rally that started in July of 2010, a case can be made that only a pullback of this strong rise is underway at the moment. But a decline below the 200-day moving average will turn the picture very negative here as well. And finally, this is the agriculture ETF, JJA. This is the one ETF that looks a bit neutral to slightly positive. That's the only one that was not damaged so hard last week. So here, notice the strong uptrend. You know this uptrend. The agriculture ETF almost doubled for the past nine and a half months, and here the decline so far looks like a sideways consolidation from the March top. So the prices are still above the rising 200-day moving average. So not a negative picture right now in the agriculture ETF and most of the agricultures, but the overall message from the conclusion from the markets that we that we examined in this video is that the commodities are turning lower right now, or at least are in danger of making a long-term trend reversal. So we should monitor them very cautiously in the next few weeks, because right now I believe we are in a cycle where the commodities should be strong, but that's not what we are seeing right now. Actually, last week this was the weakest group, the weakest asset class, and there is a danger that a major reversal is at hand. So that's all for today. Enjoy the markets in the next few weeks, and I'll be talking to you again later.